made this mistake of not having a proper trading journal for months, and I don't want you to make the same. You see, nobody told me that real trading confidence doesn't come from your mentor. It doesn't come from even signals. It doesn't come from watching more trading videos. It comes from the data you have collected on your system. And the confidence you are looking for is hidden inside the results you've personally collected from your trading system. And until you have that data, you keep doubting yourself, second guessing your entries. And this is why most traders keep jumping from one mentor to another mentor, because they are trying to borrow confidence instead of building their own. The breakthrough came for me when I completed a 100 data backtest on my strategy. And what I discovered completely changed the way I trade. And in this video, I'm going to show you exactly how you can do it yourself. Hi guys, this is PoppyJoyFS and I want to welcome you back to my YouTube channel. In today's video, I'll be talking about how you can create a professional looking trading journal that you can be able to use for your backtesting, your normal day-to-day trading journals, and also front testing as well. At the same time, you are able to collect adequate data also on your trading strategy or your system. Now, the first step before even any journaling is to clearly define your trading strategy, and not just the trading strategy alone, but the process by which your strategy operates. That means the step-by-step guide that you can use to determine your strategy right from the beginning, which is the point of getting the signal from that strategy, to validation, and then also all the way down to execution. So you must have a step-by-step guide on how this strategy operates, and you must clearly define it also before you start your journaling or even your backtest as well. So without wasting much time, let's get into it. So let us start by explaining how a trading strategy should look like. And for the purpose of this particular video, I'll be making use of the CRT strategy, right? And it's a popular strategy and very easy to understand. So the first thing to learn about the CRT strategy is that it is built on the concept that when you have a candle range and every candle is a range, and the same candle itself is a structural range on lower time frame. So because if I have this as a weekly time frame candle, the same weekly time frame candle on a lower time frame is going to have its own stuff like this, probably have its low, or let me say something like this, it has its low, and then it has its high, so something like that. So every candle range is a structural range on a lower time frame. And how the concept works is that when you have a candle range like this, the normal expectation is anytime you have a candle range, we want to see the next candle closing above. This is normally what we would expect. That's like the breakout. But in a special case whereby price fails to close above your candle range, so once that happens, we take it that a turtle soup has happened above the high. So in case you are wondering what turtle soup means, it's like a stop hunt, right? Stop hunt happening above the high. So if you understand liquidity concepts, when price takes a side of liquidity, in this case a buy side liquidity, right? We know that price will target a sell side liquidity of the same type. So that's my PDA law number one, right? But here in CRT, it is even much more easier to spot, because we just say once the candle range high is taken out, like a stop hunt of the candle range high, price tends to target the candle range low. So once we have this two candle formation, we know that price tends to target the opposite side, which is the low right here. So when you find these two guys here, that is what I call the CRT signal. Okay, these two guys is the first thing. It's like the initiator of a trade, because once I spot this guy here, now I know now that I have a trade forming. Okay, so I call it a CRT signal or a trigger, and you can find this on any time frame. But for the purpose of this, our strategy explanation, we are going to be using and even if you start or you decide to use a strategy, right? For me personally, I prefer to use the weekly, daily, and monthly, right? Those are the time frames I prefer to use, right? Of course, you can find it on 4 hours as well, but most likely I like to trade the higher time frame owns, right? So once I find this, I call it my trigger, and then I will look out for the next thing for me to trade. So now we are looking at the process of how the strategy itself should be executed, right? The first thing is find the signal, which we have just been able to spot. It can appear in any of this form. You can see This one is like very, very fast. Price takes out the eye and gets to the target within the same day. You can have this one, which I prefer. You see this type 2 here is one of my favorite because if I live for this type of signals, because after seeing these two candle formation and I know that the market tends to trade to the candle range low, I have more chances of entry. Look at the third candle now. I have a trade on the 3. I have on that trade here and that. So I have many chances to enter those trades to the target. Compared to maybe when the first or the third candle rather just trade straight to the target. You might not really get much entry. And even if you miss one entry here, that's all. The trade will just play out to the target and you did not catch anything on that move. So I prefer to have several candles playing towards my direction for me personally, right? So, but then this is just for us to get familiar with the signals. Look at this as well. This is inside bar, right? The second candle did not take the high, did not take the low. So this third candle taking out the high, it still qualifies as CRT. Candle range high taking, candle range low targeted, right? So it's a very simple thing. Now, after seeing the signal, because now we are looking at the processes for a strategy. After you see the signal, how else do you validate if the signal is valid or not? Now, I created a framework, sweep, rejection, shifts. Now, the sweep and rejection is what you've seen here. Price clearing the previous high of the candle and rejecting back. These are very, very important in trading CRT. The rejection and sweep is very important. So if price did not get to that high, we would say that, okay, you did not sweep the high. So price going here now is the sweep and the rejection is the wick you are seeing. But there's now a final confirmation that most traders that trade CRT overlook, and that is the shift. Very, very important last piece of confirmation. So if you don't have this shift, your CRT itself is going to be flawed. And this shift also is like I created an alignment, a time frame alignment for it. So if you want to verify the shift, it's not on the same time frame. You are going to get your shift on the lower time frame. Okay, the shift you are looking for is spotted on the lower time frame. And how do you get that, or which time frame do you know to go to? I think I have my alignment of time frame here, because you must understand, like, I think this is it here, right? This is it. So what we have here is very simple. It's clear as anything can be that anytime you have your CRT signal, right? The entry for daily CRT is we are making use of this guy. So daily CRT entry is this: 4 hours, 15 minutes. Weekly is H1 and monthly is H4. So any time frame you find your CRT signal, you are going to use a corresponding entry time frame to get your shifts in structure. So it's more like saying when you go to a lower time frame now, and let's assume now, remember I said every candle range is a structural range on a lower time frame. So the candle range you are seeing like this on a higher time frame, something like this on higher time frame, that is just a single week, like a single candle like this, would appear like on the lower time frame as structure. So what you need to just go and do is go and verify the shift. After price is taking out that candle range high, you have to verify that market actually takes out liquidity. Or when I mean taking out liquidity, or I think that was a mistake. You have to confirm the shift, which is the MSS. So how you get that is the structure on that entry time frame that led to the turtle soup here. That structure must be broken. The immediate low in this case must be broken for you to confirm that the CRT signal that we have is valid. Because I've seen many CRT signals that traders will see it happen like that, but only for price not to break structure. Price did not break structure, and the next thing is the market just kept on going higher because there was no shift on the lower. So you don't want to have this kind of experience that you spotted something that looks like CRT, but there was no confirmation, and you were thinking that it's a CRT now. You were already trading it and you made a loss with that. So you must verify the shift. Very important. Then after that, we are going to finally get into the entry. Now, after getting the shifts, remember the processes. The first and second candle, which is a signal. After you get the signal is when you are looking for execution. So the first two candles here is the one that initiates the setup. You have those two candles here initiating the setup. Then once you spot those two candles, you go to a lower time frame and verify your shifts. Now you can find that shift happening within the second candle or maybe the third candle might be the one to give the shift. But once you just have the two candle formation, you start looking for your shifts before you trade, right, on the entry time frame. Okay, so this is the processes. You can see the signal, the verification, or let's say validation on the lower time frame, and lastly the entry. So the entry part, you cannot make use of any of the entry techniques that I might be sharing, right, because that's another important part of it. Let me show you something quickly before we get to the charts. So when it comes to entry, once you get the shifts like this, right, there are so many entry techniques that one can build around this. For you can build OTE. I made a video around on my YouTube channel on how you can use OTE for your entry, right? So you can use OTE, you can use MSNR key levels. This level we have here, it's a QML level. The level we have is a key level that failed. So you can use that as your entry point. When price returns there, you want to enter, or you want to use OTE. That's Fibonacci. You just take it from the high to the low. Let's apply OTE, PAC OTE levels. So you wait for price to get into any of these OTE levels here, either the 62%, and you sell from there to go. Now, when you sell from here, where's our target? Remember, the candle range low remains the target. So when you trade from the OTE level, you are targeting that, the candle range low. It's a very simple approach like that, very simple. And now, just to be clear again, it's not just one entry you can get when trading CRT. And that's one of the beauty me I have with one of the things I love about CRT, right? Because after seeing your sheet in structure and possible entry here, let's assume you missed the entry or you were not even present for that entry. There are still more chances for you to enter. The market will keep on forming bearish structures until it gets to the candle range low. So that structure is like another flow that you can take advantage of, right, to still catch sales towards the draw on liquidity. So that's how beautiful the CRT can be, right? Very, very beautiful. If you miss the first entry, you still have more entry or more chances before price gets to the target. So we're going to look at the chart now. We're going to use this same strategy and we are going to document all the findings, right? We're going to document, or should I say, we're going to record this in our journal so we can see how effective, or the process by which you can keep a proper journal and also test your strategy, whether it is working or whether it is not working. Okay, so yeah, let's get into that. After what I just explained about the CRT strategy, so I want us to quickly take a look at some CRT signals on the chart, and just to recognize them and also show you how you can mark them. Right here, I have this particular CRT signal. You can see price failed to close below the candle range low. Right, so I label that as TS. So if you want to do that, just get a line, a straight line. You go to the settings, you go under text and put this. Look at the settings there. You can copy the style as well, and then save to template. Okay, very important. So you can easily get or pick that some other time. Now that you have been able to do that, this is the first one. Mark the candle range low, which is a turtle soup, and the target is the candle range high, which is this one, the candle range high. So you will notice that I place magnet at that point also, just to indicate that that's a draw on liquidity, a point I expect price to trade to. We have another model here. This is TS here too. Total soup at the low. And candle range high here as a target. Let's find more. I think I have this one too. Candle range high targets. This is another very beautiful one too. The turtle soup at the low, the candle range high. Clearly you can see the bearish candle, right? This is a candle that failed to close below it, which is a turtle soup, and price traded back to the high. So that's how the CRT model really works. After this, you are going to see how we backtest this in live condition, and now this is not a necessity, but then there are other times that we also add mitigation as confluences. You can see how the CRT signal formed off a rejection of a key level. So we add that as extra confirmation in some cases. Even here too, we have a complete fill of this imbalance. And we have CRT, so it's always that like serving like extra confirmation. Now this one is a bearish CRT. You can clearly see turtle soup above here, and the candle range low is a target. Now, there are other studies that would say that you can, if you have multiple bullish candles, of the same color, you can target the one with the lowest, the lowest low there. But for now, let's just keep it basic. If you go over here to on AUD card, you'll see similar thing. The candle range low here to taking, total soup at the low, and price traded all the way to the candle range high and on like that. So let's go straight now to the journal so you can get familiar with the trading journal, the spreadsheet, right? So this is just few of the signals, which I call them CRT signals, because they are like the starting points. So this on that CRH anyways. So once you spot this one, then that's like the initiator of a setup or a trade. Then you now go ahead and confirm the normal framework I explained. You look for the shift on lower time frame, and then you find your entry accordingly. So we're going to look at all of that in this video today. So now let's get into let's get familiar with our spreadsheets. All right, so quick one, we are going to be making use of this journal to record our backtesting results. And you can as well use the same spreadsheet for your normal day-to-day trading activities. So first thing, get familiar with this part, and that's just to impute your balance and other details that are peculiar to you. Then get familiar with the columns as well, the dates, pair. Now you can easily just pick any of the pair you want to trade. It's very easy this way, right? It's just easy for you to just pick either pounds, USD, AUD. So instead of you typing it all out or all over again, you can just select it easily here, right? And then we look at are you buying or selling, are you going long or short, the type of trend, and now the setup category here, in PAC I have 4 major strategies, right, or categories of setup: the CRT, PDA, whatever one you are trading, you should also put make sure you document that here as well. Then the type, let's talk about, is it a reversal trade, a continuation trade? You should keep a record of that. And the outcome of the trade itself should also be collected. Now, most importantly, you need the link. This is very important. The link before and after the trade. So here I have about 3 columns for the link before, right, the higher time frame. So it's important for you to actually keep a retention of the back setup, because most times that you take a trade and it doesn't play out well, let's say you misjudge the market or something, there's a high tendency that you might make that same mistake again, or you might meet that same condition in the market again and you would still fall for the trap, or you still make the same mistake. So that's why it's important to keep a record of your trades before. You understand? So that way, when you are doing your reviewing, maybe on bi-weekly or monthly, you'll be able to go through the ones that did not play out, and you'll be able to see the exact way that setup looked before you actually took the trade. So that way you are able to recognize the bad setups. When you see them in real time, you'll be able to recognize that, I've seen something like this before and it really did not play out like I expected. So that way you are getting better. Right? So, and the same thing will go for your winning trades as well. When you see the same setup, that way you're able to define and to pick out what you can call your high probability setup, right? Because that way you would have been able to see that this is a pattern I see, and this pattern always play out for me anytime it happens or anytime it appears in the market. So that way you can keep a record and say, now I have high probability, and then I also have the worst case scenarios I don't want to even near at all. So you must keep a record of that as well. Now, another thing is the trade notes, pros and cons. Now, this is important as well. The outcome of the trade and how you feel before taking the trade. Now, this one is like a mental journaling. There are some setups that within yourself, is like 50-50, and there are some that you are so confident that you've done everything right on your part. Everything is aligned, there's a confirmation, there's everything, and you are confident. So you must also journal those traits, like your emotions as well, very important. So that way you are able to know that, okay, what are those things that, the ones that you were not really feeling comfortable with and did not, probably market now played out. That way you can actually make much informed decisions in the future. Okay, very important too. So now let's go and make use of this journal in real time. So we're going to be doing a back testing now of the CRT signals we've seen before. We are going to see if they really align with the way we want them to be, right? And we are going to document all these things accordingly. So now let's get to that. So the first example we're going to be looking at here is this pounds JPY, right? And then let's take a look at this. We have the CRT signal here, which is a total soup of this candle range, and we expect price to trade all the way up. So what we are going to do is, as we are trying to record this on our journal, we are going to have the higher time frame, which is a setup before the trade was before we took the trade. So here now, this is our setup. So we're going to keep this now, copy the link, and we'll take it to trading our journal here, and we're going to paste that here. So this is the link, and since this is pounds JPY weekly, we're going to search for GBP JPY right here. Now, in case you don't find what you are looking for, over here is my variable, so I can easily just edit any one of them, GBP JPY, right? And it's going to appear over here. So we can easily pick GBP JPY, long position. The trend is bullish. Yeah, we're trading CRT. Is a continuation model, type 1. Now, we don't know the outcome yet, so let's leave that. So right now, we have been able to see the model. The second thing we are going to keep a record on is the medium time frame. So in this case, my medium time frame is the 1 hour time frame. So we're going to go to daily time frame rather. So this is my medium time frame. Now, on the medium time frame, make sure you capture the trend. That's the purpose of the medium time frame, just to have a view of what the trend of the market looks like. So when you are reviewing your trades, you are able to see a very bigger picture, right? So take a copy of this link as well, and we are going to paste that right here. Okay, so the next thing is the lower time frame link before the trade. So first, next thing we're doing is reviewing, should I say validating our signal, the CRT signal. And how do we do that? I mentioned that you go to the 1 hour, which is the entry time frame. So since it's a weekly CRT, you go to the 1 hour time frame. And one other addition you can add is this particular indicator, the FXN week and day separator. Let me turn it on. So it is the one with this yellow dotted vertical lines. So you can easily spot the a week very, very much clearer. So on the daily time, on the 1 hour time frame here, you see this is the lowest point of a particular week, and this was the highest point. So clearly, what we have is a sweep of a previous week low. And how do I validate this signal? Like, how do I confirm the shift? Personally, I like to use the line charts to get my true pricing. Okay, so when you go to the line charts, and according to the principle, you are looking for where the last high that gave us that total soup. So this was the high that that actually went to take out the previous week low. So I'm going to place a line there to show that, okay, that's the major high I'm looking at to get my my shift in structure, right? So we're going to see, do we have a breakout above that high? So I think we do have a breakout there, which is good. So now remember, when you are trading CRT, you will not trade the first candle, the second candle, right? The first candle is the candle range. The second one is the total soup. The third candle is when you engage. So on this one here, look at this clearly. We clearly have our market mitigating this level, mitigating this one. So the last one that has not been mitigated is this key level here, the V-shaped key level, right? And then I have liquidity just before it. So let me just tell you real quick here. One thing you are, one of the things that the CRT model will tell you is direction. Now, one other thing that you can be flexible around is your entry, because I will tell you for free, the market is very, very dynamic. So most times, if you pick only one model for entry, you might be mistaken, or you might be surprised that the market might not really give you that model much. So me, I'm very, very open. As long as I know my direction, price is going to this high. So I am very, very open. And you can see me choosing this level as my entry. So look at the level for the entry, the key level. The stop loss below it, you know, I tend to give it enough room sometimes too, right? And then I'm targeting where. Now, if you're not a swing trader, you might not want to target that high, you know, thinking, it's too high or something. Now, it's all good and fine. So if you're not a swing trader, you might not want to target that, okay? But then for me, I'm going to be targeting that. And remember, I mentioned order flow. That means there are numerous other opportunities that you will get along the way, right? The market just keeps on forming that structure until it gets to our main target. So right here, let's see how this one really plays out. Okay, and let's see. Now, can you see this? Now, the moment price starts creating new highs, and that is where your own opportunity comes in. The moment price starts creating new highs, that is more opportunity for you to engage, right? This on that level here, I'll be looking to engage from, right? Like it's on that very good level, I'll be looking to engage from. And you can just start taking it from that point on and on until price gets to the target. Okay, there's something I forgot to do, which is before the trade here was activated, you would have taken a screenshot here. This is your setup or the screenshot before the trade, and you are going to document that as well. So your lower time frame before, this is it, right? And then by the time it starts playing out, or should I say, because this is the first entry. Now, to be honest, this same trade or this same setup, the same data you have here, you can repeat that same data for the second, right? The second pair and say, we have on that trade, because here it is not just one opportunity you have numerous ones. You can say I have on that level here that the market can actually come back to. Let's say I have on that trade from here now, for example, placing my stop loss below that demand, right? Where am I taking my trade to? It's still all the way to that high, isn't it? So if I get another trade now, you can see it's a continuation. So it's not like the setup has changed. The major indication for me to buy, it has not changed. So I'm only adding more position to it. So in that case, you can still maintain your initial CRT on the higher time frame, or you go and even take a screenshot of the current one, and you just play, right? Let's see how this guy's playing out, and let's see if it's giving us what we want. So yeah, let's see. Now this one has given us the entry. Because of this, we've seen the entry here. So where are we taking that guy to? So now the market keeps on pushing and pushing and pushing until it gets to the target. So let me just save time and let's use daily time frame. So on the daily time frame here, you would see how that guy played out, and now we are at the target already. So I want to just keep a record. So if I'm taking those two trades now, all I need to just do is just copy, and then let me do a copy of the link and also document the outcome also, right? So we're going to document the outcome of this one as well. So medium time frame or lower of the outcome. So we're going to document that. Now, the major thing you are doing here is after months, by the time you input all this data, right, and you have everything filled up, and you just keep on doing that for more and more entries, you get to realize that at the end of the day, you would have collected enough information about your strategy. Now, let's go over to another one. This is gold. And I want us to look at this CRT, like this particular CRT signal. Look at this clearly. This is on that CRT signal, right? Now, we have one here. And I think maybe I mentioned it around this video. There are other instances that price might not trade, to your, might not really go like, just like we expect here. If you have the CRT signal, you expect it to trade and sell down to the candle range low. There are peculiar cases that price will just stop in between and continue. So you can see this imbalance here is the internal range liquidity. And it's like a level that market also react to. So in case you have a setup like this, that you would be expecting price to sell down here, but it rejects at the internal range liquidity, it's also possible, right? So, and that's what happened with this, CRT signal. You can see candle range low taking, candle range high was targeted, but look at the imbalance here, and that's what caused price to continue selling. So now we're going to really focus on this current CRT signal. So when we have something like this, we're going to document that as our higher time frame. So I'm taking another line, right? And then I'm documenting for, let's say for gold, XAUUSD. Is it shorts? Now the trend is bearish. We're looking at the bearish market, still CRT, right? It's still, now I'll call it a reversal. I think I'll call it a reversal, I might call it a reversal because I'll call it a reversal continuation. I think it fits into continuation more perfectly, right? And then let's say more than one. Now the outcome for this one, the outcome here was a win. The second one too was a win, just copy and paste and all that. So for this particular gold, now let's do the necessary things that we do. And what's that? So we're going to verify. Okay, now I've not copied the daily, so let's go to daily as well. Remember, daily is a medium time frame, so you're going to do the same thing there. And like I said, when you are keeping your journal, you are going to make the structure known. So this is why we see it downtrend, so everyone can see it, right? I think we can have a very big picture of it here. So clearly, this guy is a downtrend, lower low, lower high, lower low. So everyone would see this now when you take a screenshot and you update that in your journal. So your medium time frame is going to look like this. Oh, I think I did not copy for higher time frame earlier. So let me copy for higher time frame again. So this is the higher time frame, and so that's CLT, and this is CRL. That's the target. So let's copy, and lower time frame before trade. So this is where you are going to see, you are going to confirm if the CRT model is valid or not. So what do we do with it? We're going to go straight down to the 1 hour time frame, right? So here I just need to give you a clear picture of it. Now the indicator, the FXN indicator, doesn't work on gold, so we are going to do it in a manual way. I'll place a vertical line like this to indicate the start of the week. So this is the start of the week. Let's see. Another end, start of the week. Another one. So clearly what we are seeing here is that this is the previous week high, right? And price has swept that previous week high, and we're looking for price to trade to the week low, right? So now, how do we trade it? Now, we notice what happened here. When price got to the previous week high, this is the initial high, right? And when price got there, do we have a shift? Now, let's go and check it out. This is the low that, if I want to trade, I would have said, once price breaks this particular low, rejects and breaks that low, then we have a shift. But because price didn't give us a shift at that point, right? You can see that's the reason why price still went up a second time. So now that means now I'm going to place this particular low as my recent low, right? So it is until I have that low being broken that I would say I have a shift in structure. Is that correct? So let's see, do we have that? Now we have that. So now that we have that, what's the next thing we're going to be looking to do? We're going to look to enter. And what would I do? For me, I have numerous entry patterns, right? I've thought about a lot of entry patterns in my previous videos. And one of them for me is a QML, right? A failed level. This I here is a QML level, right? So I will be looking to take a trade, and more because it aligns. So let me check on this time frame. Yeah. So more because it also aligns with, if I even check on this, you can see. So we have more reasons why I would want to buy from this, the 1 hour key level I mentioned, right? So, and let's take it back to candlestick chart. So right here, I'm looking to sell rather from this level. And if I'm selling from this level, where am I taking my trade to? You already know the target. And what's the target? The target is the candle range low, which is this week low right here. So that will be my target. So, and that's not all. Even if you miss this particular entry here, the market is building order flow, which is like, lower, low, lower high. So you will still get your chance to enter on another one, if the market presents that anyway. So let's see. Let's play this and let's see. Now look at that. Clear, easy trade all the way down to your to the target. So you can see another chance of entry here, and on and on until price goes to the target. So this is just a very good way to explain how the CRT works, and how it also offers numerous opportunity for you to re-engage on it, right? All you just have to do is just to understand it, and then dot all the T's and I's, and you'll see it playing out for you. So you can see when you see the CRT, make sure you have a shift. Very important. I think we forgot to also document this. So let me keep this as a before, right? So we're going to take a screenshot here to copy, and we are going to place this as our before. So eventually, after it has played out, we are going to also keep a record of that stuff after it played out, right? So also update our journal. Very important. So let's update that as well. So you can see clearly how this thing works. Now, it's not all the CRTs that will play out like this, right? Look at this BTC setup right here. Now, this is on daily time frame. And if you look at this closely, the candle range low here, look at this. This is a bullish a bearish candle. Price swept the low here. So we expect it to go for the high. So, okay, let me do this. We're going to enter the replay mode as well. So if I have this as my setup, what do you think I would do? Like always, it's very simple. I will document this and take a screenshot, for my journal. I would say we have BTC So do we have BTC here? If I don't have BTC, all I just need to do is include that here. So now I would have BTC. So now I have BTC. So this is BTC now. So I'm going long on BTC, right? And what's the trend saying? Now you might have to check. I think it's bearish from that line. So it's a CRT setup and on and on. So now I just have to copy and paste the first link I have here for the higher time frame. Then I go to, now if I'm using daily, I think my medium time frame is going to be 4 hours or maybe 1 hour, right? So I will also update it like this. Like this is my 4 hours time frame. I'm going to copy this also. And lastly, the vibe. You are going down to the 15 minutes time frame. Now, the 15 minutes time frame is where you validate the setup, right? This is where you validate the setup. So look at this guy here. What you see here, this dotted line is the daily separator. So the CRT signal you're looking at, like the one you are looking for, is clear and is found here. Look at it very well. See? This is a previous day low and this is a previous day high, what we would call our candle range high and candle range low. So what happened here is a total soup of the candle range low, right? Clear as daylight. Price swept liquidity of the previous day low and is going for the previous day high. Now, the peculiar things that we always look out for is this was a move that swept the liquidity, this particular one. And we already have the displacement just like we always do, right? So after that displacement, which is what we call the shifts, we would have already started looking for buys. The only thing here is that that already happened from the second candle, which is the candle that swept the liquidity. So the candle that swept liquidity also has given the shifts. So that means you'll be late to the party. So because by now the third candle is when you engage, and now price has given the shift, it has come for retracement. So the third candle, the only thing you can do here is probably just hope to maybe have a small retracement back to this level for an entry, almost instant entry, and probably place your stop loss here, and you are targeting, where are you targeting? The candle range high. So in this case, this is our setup before. So let's do a copy of this one as well. And let's update that accordingly. And then let's play and let's see, do we have the entry or not? So this is one of the cases that we'll call no tag, right? I think price never tagged until it got to the target. So this one would have been a no tag. Although we have another chance here, which you could also document, but on this particular one is a no tag, which you would also add, do we have a win or a loss is no tag. Okay, so it's a no tag setup, and that is it. And that's it. So this way, let's update the final thing as well. Let's do a copy and let's update that. So we're going to update that. So by the end of the day, when you have been able to collect enough data on your model, right, you'll be able to see. Now, if you notice what's happening here, as you are putting this data, it's counting the number of trades for you, right? Can you see that? It will count it for you. Let's say this one was a loss now. You would see how your win rate thing would have dropped here. Let's say it was a loss. Can you see? So it's going to give you a picture of your win rate in percentage, and you can easily use that to evaluate the performance or how good your strategy is. Okay, so now that'll be all for this. So the video, or should I say the link for this particular journal, will be dropped in the description of this video, right? So make sure you get it, and you also start doing your backtest the right way. Okay, create the process of your strategy and you start backtesting the process, so you can be able to see. Now, I think another thing I didn't mention is this one. We have another one on the daily time frame here of BTC. We have this beautiful one as well that didn't play out. I posted this on my channel and I was asking then, do you think it's going to play out or not? Right? And what do we have there? Simple thing also. Now, this is under CRT signal. So if I was documenting this guy here, right, it's also like this one is not valid, because after seeing a candle range high taking, the candle range low would have been targeted, right? But the major thing I've added to it now is when you see this, you go over to the lower time frame and you validate. So the lower time frame here is where I saw that, okay, look at this guy. Price is going above the previous day high, but something never happens. There was no displacement. So that means, I always mention that, look at it now. The first candle that swept that high. When it went down, it did not break the low. And that's why it went up. So assuming break the low the second time, we'll say we now have a sell and would have sold all the way down. But because that never happened, you'll notice that the market never gave us any sell. It just kept on buying. So that's why it's not good to trade the CRT model blindly. You must have this kind of rules that will prevent you from making the wrong decisions. This price just kept on buying. Whereas someone else would have argued from the higher time frame and say that it's going to sell for sure. But with this framework, you'll be able to trade it objectively and also much more accurately. Okay, so thank you. If you found value in this video, make sure you subscribe because I always upload content designed to help traders simplify the market and make better decisions. Thank you for watching, and I'll see you in the next video.